Welcome everyone to the Financial Futures and Market Recap Show. We do this every Friday, roughly at 1 o'clock, 1:30, whenever we get a chance, really, Steve. This is a very busy time. Welcome everybody to give a big welcome and shout out to Steve Merril. I'm tongue-tied because I've done too many shows today. But Steve, welcome to the show. How are you seeing things these days?
I've seen them well. We got NFL preseason here, first full week of football, and there'll be no Saturday or Sundays. Definitely no Sundays off until February, starting this week, because we got 2 NFL preseason games. So it kind of puts it in perspective. A little sad in a way, because, I mean, summer's winding down, but also excited that football's here around the corner.
Yeah, I sure am, too. The football season is, I think, for whatever reason, I think this is going to be one of those extraordinary seasons. You know, with Georgia, I'm not sure if they're capable of pulling off the hat trick and winning 3 in a row. But there seems to be a lot of teams like Texas on the horizon that could really make a big run, even Penn State, USC. There just seems to be a lot more names that might just be there at the end than just saying Alabama, Georgia, and another SEC team to be named later.
Yeah, I mean, history shows, even as Alabama was a pure powerhouse for the past couple of decades, that you normally do not win 3 in a row. And Georgia's definitely been the strongest team, but it's hard to imagine they can be that much better than those other SEC powerhouses because Alabama never was. And we'll see if Georgia's for real. And I liked where you went with Penn State. You know, the viewers that missed the show last Thursday, we did it heading into last week, and we did it a little early on Thursday. You gave out some great info on Penn State at the end, and like where you're going with that. And what I said there is, you know, Michigan, Ohio State are powerhouses, but if Penn State can pull that upset, it's the same thing with one of those SEC schools. You know, those major conferences, if you can pull that one upset, college football is unlike any other sport. You know, 1 or 2 games basically is the whole season, and you can get into that 14 playoff, anything can happen.
And especially with the demise of the Pac-12, you know, just this past week with more defections, and
right.
It's crazy to think that, but you know, I guess the downside, Steve, that I saw with this, I mentioned on some other shows, is that what happens to the Pac-12 girls softball league season? Those are the elite teams in all of girls softball. And now because of the money that's being offered by the Big Ten, that those girls' seasons are going to be disrupted. And, you know, it just seems like, you know, kind of like nobody cares. But I'm sure they'll figure something out that'll make things a little bit better than what they seem to be right now, but we'll have to wait and see.
Well, 99% of the sports public, well, 99% of the betting public definitely does not care. And that's the exact reason it happens, is that
it's true.
Football and men's basketball is 99.5, 99.9% of the sports betting in college sports. So, you know, that's what rules, but it's such an excellent point. You're talking about 20 to 30 scholarship sports across the board, and everyone forgets about those other 90% of the sports that do get affected. But football is what pays the bills, though, for those other sports in the long term.
Oh, there's no question. And the money's huge in the Big Ten. There'll be 16 teams next year, and then 18, I guess, the following year.
That's crazy.
That's my favorite trivia question right now, Steve, is you see somebody like after playing a round of golf and you start talking football this time of year, the number of times I've said to guys, yeah, the Big Ten's going to be good this year. Well, name them. And every single time, even if it's a smart guy, they stop when they go 1, 2, 3, and they hit the 10, and they just look at you like they're satisfied because they answered it right. Nobody's ever gotten it right.
Yeah, it is funny that they still call it the Big Ten, the Big 12. It was the Big 8, of course, and I think it's like the 5 and below in the Dollar General stores. You kind of got to get away from using the word dollar anymore. And probably have to get away from using numbers in your conference affiliations because it changes on a weekly basis.
Yeah. Well, here's the market this week, and hopefully everybody can see the chart here. But I think last week we got that down arrow right there. That was one of the engulfing candles, and there's the bigger one that happened before. And we did mention that this was not a very constructive sign at all. Now we've had 4 consecutive down days after a pretty big drop on Friday. Monday was an up day, which was pretty strong candle there. But again, the selling pressure is coming in, not tremendously in a big way. this seems to be a natural consolidation. But what I found interesting is the market's actually doing better than Apple, which had gotten into the stratosphere in terms of price earnings ratio, and probably was priced a little bit ahead of itself. And not as many people are buying iPhones, although Apple took more market share from everybody else yet again. And they have a big thing coming out, I think September 12th, to announce the iPhone 15. The Pro and Max are apparently going to have the latest latest processor that they make, and that's Apple right there. You just have to not worry about these little white lines here, because I can get rid of those later. But it really did have a pretty big drop here. We're talking about Apple. Apple usually doesn't have drops like this. But it seems like the market now has become broad because Apple's gone down. I don't know if you're seeing the same thing or feeling the same way, but what do you think about this development?
I do. We've talked a few times about how the S&P 500 is so misleading, because the reason that buy and hold works long term is because I'm a trend follower and I don't like buy and hold. But the S&P 500 index is a trend following index because it's not equally weighted. It weights the stronger components much heavier, and basically the top 15 companies make up, what is it, like 70% overall. The
Right.
other 485 make up hardly anything. But I do find it strange that Apple, I believe, is the biggest of all of them, right? Because if you compare them to like what Google and Amazon does, it doesn't make a lot of sense, because Apple basically makes phones and laptops, and their phones are better than they've ever been. You really don't, I mean, honestly, unless you destroy the thing, you don't need to ever get another phone. I mean, it's got more memory than computers had 10 years ago in the palm of your hand. It definitely has more than NASA had in the entire Space Center when they launched the moon rocket 50 years ago. So
That's so true.
that's so insane when you think of it in that regards. And the laptops are pretty darn good too, where you don't have to be replacing them on a weekly basis or a yearly basis. So you do worry about that long term. Whereas if you look at like Google, I mean, their online search, they basically, can control anything. And then you look at Amazon, which is basically a bigger version of Walmart now. And even Tesla, I mean, Tesla you can make an argument for. Not only do they make great cars, but they're also on the battery technology side ahead of everybody. And that's where everything is going in the future. So I think you could definitely make a case that Apple probably shouldn't be the strongest company in the world in that regard. And it is basically the S&P 500 along with those other companies. So it's interesting. If you look at those support levels, though, John, I mean, you can see them right there. You go back to like June or so, it's hitting those tops. So once again, if it holds, it'll bounce off. But if not, it could be some substantial downside if it doesn't hold.
Yeah, I mean, it's not that long ago either that Apple was a lot lower than where it is right now, in the one teens. So it is up 70% since then, and that's basically since COVID. So it's a huge move. What I find fascinating, when they correct this move here, they've gone from about 3.1 trillion market cap. I have trouble saying that word.
Yeah.
And now with this, what is this? Basically a 10% decline. The amount of market cap that they've lost is more than probably 70% of the NASDAQ company's market cap. That makes sense with that, how I said it? So in other words, they've lost about $300 billion in market cap in a week, which is bigger than 70% of the companies on the NASDAQ.
Right. And the reason this is important, too, is because whether you care about Apple or not, like we said, it's a self-fulfilling prophecy that it's going to affect the S&P 500. And that's pretty much what everyone's invested in, whether it's retirement, day trading, whatever. And it also affects the overall market when the biggest holding starts going down, because people might have to pull money out of other holdings to cover those losses or whatnot. So I still think you got to be very careful with the S&P for that reason, because some of these companies are so top heavy. Amazon's looking pretty good, but I think Apple, you could definitely make a case why Apple might come down a bit.
Hey, that's Amazon right there. I'm going to go back to Tesla real quick, because there's an article in the Wall Street Journal. I actually thought of people like you that no interest rates, no financing. It's almost 30% of Americans who bought cars in the last 18 months. The car payment is $1,000 or more a month. And I was kind of shocked by that. I guess I shouldn't be, but when you're paying $1,000 a month for a car, that is, unheard of in at least in my world of finance. I used to be able to lease a car for $399, and you still see the ads, the teaser ads, but that's for your bare bones type of car. But Tesla, in this article, it was in the Wall Street Journal today, that Elon Musk is going to offer financing of 84 months. 84 months at, what's the interest rate right now for good credit for a car loan? 8%, 7%.
Yeah, I
It's
mean,
kind
yeah,
of
it's like
scary.
6 to 7%, unless you're getting a teaser rate. It's gonna be 6.5, 7, because I mean you can hold cash savings right now is over 5%, so it's always gonna be a little higher than that. Um, yeah, and I mean also the Model Y and the Model 3 have obviously changed the game. You know, you see those everywhere now. They're the most sold cars in China as of now. China's gonna have like a $5,000 electric car soon that's gonna overtake all of that. But I don't let's put it this way. I don't bet against Elon Musk, right? He's the Alabama of financials, and maybe you could say Steve Jobs was as well, right? But he's not
Yep.
around anymore, and that's another reason I could see some chinks in the armor of Apple. I'm not betting against Tesla though until Elon's no longer involved.
Yeah, and I agree with that. He is kind of,
He's like the Steve Jobs of
yeah,
batteries and motors now. I mean, and Bezos was like that with Amazon, and now Amazon's so big now they don't need Bezos anymore. I think, just like Microsoft didn't need Gates after a while. And Google's a different story, but Tesla is Elon. And if Elon was ever to step back or whatever, that stock would plummet, and it probably should. He's the reason I think it is so valued and should be.
yep. I actually think I could be dead wrong, but I actually think it's someday, next 10 years, he'll sell Tesla to somebody. Now, whether it's, BMW, Ford, who knows? But that's just a gut feeling. I have no facts
Well,
to
I think the
support
reason
that.
you could be right on that is because what makes him so great, as with any of these guys, I mean, he's a workaholic. Like, he's the wealthiest man in the world, and he still works more than you and me combined, and we work a lot, So, and like, I can't relate to that. Like, I wouldn't want to do that. Like, I'd want at some point rest on your laurels. It's like, but that's not why they get to that level, because they have that ingrained nature that most humans don't. And with that, he started with PayPal and off-sold that, and then he started really in the space. The space thing is
Yep.
his vision. It's not making cars. So I think you're exactly right about that, and that probably will happen for that reason. And if it does, it's because he's focusing more on space or whatever. It's not because he's retired, obviously. It's because guys like him go to bigger, and I mean, nothing would be bigger than going to outer space. I mean, it's the next frontier, and he wants to do that.
Yeah, I remember when he was first launching those rockets, and then the returnable rocket that would land on a barge. And apparently, the story was that this barge is moving down a river, and the bottom part of the rocket that can be refueled and reused missed by 6 inches of where it was supposed to land on the barge. And the people responsible for that apparently really got called out, and that this can never happen again.
Yeah,
6 inches.
he's a workaholic, and like I am, I'm going to leave you to finish up the show because I'm jumping on MLB First Pitch, WagerTalk TV. Watch the replay. You get a chance. It'll be up all weekend. And John, you and I will catch up. But I'm going to watch the replay of this show as well because I want to get your thoughts on the S&P after I log off here.
Okay, thanks for joining me. I'm going to go about another 5 minutes here with the 10-year note and the S&P, and then we'll catch up again.
See you, my man. Thank you.
You got it. See you, Steve. So that was Steve Merril of WagerTalk. And if you watch any sports show, other than my own, of course, seriously, watch Fade the Public. He does some really great work with betting sentiment and betting numbers, betting flows, and you cannot go wrong. You'll be a smarter person in doing that for sure, no doubt. So here's the 10-year note, and the concern now is that we're starting to get near the lows ever made during the first couple rounds of Fed tightening. And this engulfing candle right here is significant, but it's offset by this one right here. And we're now testing those lows. This is not an unusual pattern. If we take out these lows, we're obviously going to go and make new highs in yield and possibly considerably lower in the 10-year note. So that's something to keep an eye on, and that could be the market pricing in the next 25 or 50 basis points of tightening if the Fed opts to do that between now and year end. But that could cause a little bit of a problem with the S&P 500 as people lighten up and change their portfolio positions. 401ks definitely would allocate assets differently with another Fed rate hike. So keep that in mind. We're getting on the sentiment reading here on the S&P 500. It's starting to get down in a level where I don't really think we're going to go down like crash hard. That this is a consolidation. After all, we've gone from here to here pretty quickly and pretty organized. And now it's just time to correct the prices because they overshot valuations for the most part. So I don't think that's really too much to worry about from the action this week. It's been pretty balanced, just with a general negative tone to it. And we'll see what happens next week with that. And then with the sports stocks, I always like talking about the UFC because I'm fascinated with that sport. And this stock, I think, bullish, long-term bullish position is a great opportunity, even at the price of $25 a share. You can see this little rounded bottom here. We have several bull candles here as labeled by the arrows. Earnings, you can see that right here, negative earnings in the last 2 quarters are pretty darn good, right? So I think this stock has room to fly, and I wouldn't be surprised if it challenged 40 even by the end of the year because it's in a very, very good position, and it's only going to do better and better as the sport grows in popularity. Then we have DraftKings, which I think is another good one to take a look at. And you can see here, this stock has really done extraordinarily well. $20 up to 28. That's almost a 40% move here in a very short period of time, just since May. And I do think that DraftKings is going to continue to trend up no matter what the overall market does. So this might be a good stock to have if you're concerned about the market going down, because it kind of trades in its own environment. It's based on people playing DraftKings, and I don't think the economy is going to get so bad that people stop doing that. So it stands to reason, and with the additional states that are going to be legalizing their sports betting platforms and programs, that they're going to have more and more opportunity to produce more and more revenue. And I think that's another good one as well. If you have any questions or you want us to look up a stock, please do. I already have a request for 3 of them, which I'm going to put in the comment window and then update accordingly with those ticker symbols. One is a coffee company that is really going to do extraordinarily well. It was actually brought to my attention by one of my sports betting clients, and his name is Pablo. So Pablo, thanks for that idea, and that was a huge recommendation for me to take a look at it. I would have never seen the stock had I not gotten your alert. So that's going to conclude today's show. And until next week, when Steve and I return roughly at about 2 o'clock Eastern Standard Time when we do these shows, remember to, invest with your head not over it, bet with your head not over it, and may all the wins be yours.